Welcome back to the channel. It's me, Adam. In this video, I want to talk about desktop metal stock. But first, I want to let you guys in on a little secret. There's a little bit of a backstory, a little bit of context with me and one of my bigger regrets last fall when I was trying to learn how to trade in the stock market. So you're going to want to listen to what I have to say in this one, guys. So this used to be a special purpose acquisition company, or a SPAC, once upon a time. And essentially what that is a company, a public company, essentially only exists for the sole purpose of bringing another private company public. And that was Desktop Metal. Essentially both companies come to an agreement, to a merger, and it essentially becomes Desktop Metal and takes over. And there's a bunch of details when it goes into that. But that was last fall. They merged together, then they became Desktop Metal earlier this year, and the stock price has been going all over the place. Alright, so take a look at this, guys. So it used to be called Trine Acquisition Corp, I think, and then the ticker symbol was TRNE. So this is where we are now at around $7.19. When it was a SPAC, it was about $10 or so, and then the news came out, I guess around July time or maybe September, and then it jumped up to about $12 and then went back down. And this is when I started getting into the stock. I'm like, okay, cool. SPACs usually don't go below $10. This was kind of the thinking back then at the end of 2020. The SPAC market was really hot at the time. Everyone was in it. It was like the hot trade of the time. These were the momentum plays before AMC and GME existed. So I got on in these areas over here, and I just couldn't handle the volatility at the time. So I got out, let's say, around $11, right over here. And you guessed it, immediately, a few days later, the stock jumped up from $11 to $17 to $22 to $28, all the way up to about $35. And then the bubble just popped right after that. However, hindsight is 2020. It's so easy to say, oh, you should have held on, you should have, sold right at the top and bought right at the bottom, obviously, right? However, at the time, I would have been so happy with a 20 or 50 or 70% profit that I probably would have sold out of here out of fear that it wouldn't have gone up anymore. But a momentum play, you don't know where it ends. You don't know when the party's over until it's too late, until we all know it's over. And this is one of the many, many, many lessons that I've learned and experiences that I've had. And this one wasn't so bad because I actually didn't even lose money on this one, right? I just lost the opportunity to triple my money. However, I didn't lose any. So it wasn't an expensive lesson per se, but it was a opportunity cost one. But honestly, at the time, I had no idea that it was going to just erupt like that either. I mean, there was a reason why I was in the stock to begin with, but I had no idea that it would do what it did. All right, so taking a look at Yahoo Finance. So why is this company speculative? So first things first, it has a market cap of $1.87 billion. So it is small relative to the stock market in general. And it is under $10. Now, not every stock under $10 is speculative. However, a lot of stocks under $10 are trying to make names for themselves or trying to strengthen their reputation or their trust with the stock market in a way. Additionally, it isn't profitable yet, and I know that is a big thing for a lot of investors. A lot of people will just get turned off by that right away. But that to me is just another additional risk. It's not a company that I would put all my marbles in because there is a lot of risk in the long term as well. However, it does have an immense amount of long-term potential, as we'll take a look at in a moment. All right, now take a look at this, guys. This is pretty cool. I give that A+ for music, by the way. That got me excited for the future. And taking a look at the investor presentation, so AM stands for additive manufacturing, which is their new technology when it comes to 3D printing. So AM industry to grow to 11 times over the next decade. In the early 2000s, the AM market size was less than 1 billion, growing 9% a year to 1 billion in about 2007 or so, growing at a 20% clip pretty much over the upcoming decade to 12 billion. Then in this upcoming decade, growing at 25%. So seeing, guys, how it's exponential growth. And that prior to 2020, we were with AM 1.0, and then now going forward, we're going to be with AM 2.0, which is next generation technologies focused on enabling volume production of end-use parts with finish, accuracy, properties, and economics, competitive with conventional manufacturing. So new players driving advances in speed, accuracy, and material variety. And looking at the product portfolio, guys, it looks pretty impressive, looks pretty cool. And just the quality of them, Desktop Metal looks top notch. They have a global distribution network of over 200 partners, geographic coverage across all major continents in 65 countries across the world, strong horizontal focus across commercial and industrial applications, complemented by vertical focus in medical, dental, and jewelry. Another big investment theme over the upcoming decades is ESG. How good is it for the environment? And Desktop Metal delivers green manufacturing solutions at scale. So this is very important moving forward. And there's some cool other slides about how it helps in healthcare. And this is the one thing that could get investors excited, is looking at their customers. You have Raytheon, Ford, Hyundai, LG, Nissan, Amazon, Adidas, John Hopkins, Toyota, Harvard, GE, Lockheed Martin. High margin product platforms with recurring revenue streams. So once you have a customer, it could be a sticky relationship where they just keep ordering from you for future machines. However, how often will they be needing new machines? How many machines do they need? So those are all things to take into consideration. So there's a lot of interesting 3D parts when it comes to the stock. Looking at the chart. So we've been in a pretty vicious downtrend since that peak back, I think it was around February time, when most of those hyper growth stocks reached their 52-week highs. And it's just been viciously being attacked by that 20 EMA. Whenever it presses against it, it'll usually find resistance, except for this one time maybe in June where it touched the 50 EMA and then it got rejected as well. So this one's just falling down. We haven't really created a base yet in the stock, so it could completely keep falling down, but until what point? So right now you could be catching a falling knife if this continues falling until we see some kind of consolidation or a kind of rebound toward the upside. So I want to reiterate, guys, this is a risky long-term speculative stock that could prove huge if they are successful, but there's no guarantee. Again, they're not profitable. Anything can happen. But again, they have large, big companies as customers. So it'll be interesting to see what happens or where the stock price rebounds from here. Let me know, guys, your opinions below. Are you invested in Desktop Metal? Short term, are you trading it? Let me know, guys, as well. As always, subscribe, smash that like button, and I will see you guys in the next video.